Hello, today is Tuesday, the 24th day of July, 2018. My name is Derek. This is the Money Charts channel and the Crypto Day Morning. All trades, all bets, all wagers, and the like is that of your own risk, own reward. I'll be presenting markets, how I see it, how I'm trading it, and of the like. And of course, for myself, risk reward management is always job number one. Bitcoin back over 8,000 and at around 8,200 now, making it to highs not seen since May the 22nd. So a little over that of 2-month highs since the break of the neckline at about the 6,800. It's up about 1,400 basis points. That's larger than that of 20%. We look at this on the 3-hour time frame. This was the spot recently where it was hugging the 18 average, showing strength amongst so. I mentioned how the pattern of spending several periods like this, the red candle down and the large green candle up to such, is a very strong setup. Several days correcting that of time, not through price, but through time. And then we can see here with a decent green candle up, a pause candle, another decent green candle up, and more of a pause, but a bit more volatility because the lines on the current one with 2 hours and 6 minutes remaining, or 1/3 of the way through, is correcting, but it's having a bit more volatility. Also worth note, when you're 1/3 of the way through a period, regardless of the time frame, as long as it's a movable time frame that has good movements every period, you should expect that within 1/3 of the time through, you can have decent sized movements that occur. And ever since getting above this resistance, fast move again up to the 8,000, correcting through time short term. This is the 15-minute. Continuation to the upside and back down again and starting to possibly lift higher again. But overall, these gains are not really coming in fast and furious, but definitely noticeable. For I have seen faster gains before. When we look at this with Fibonacci from the $10,000 high and the most recent low, it resisted the 23.6, a little bit above, pull back, and then a fast move with no resistance in at the 38.2 or even that of support. It corrected roughly around a 43% correction and has now just recently gotten past the 61.8, which if it can hold, stay above around this area for a decent amount of time, then that's making a statement that the entire selling that occurred from the month of May is that of a failed breakdown, which, given that the trend has been going in a sideways plus then a bullish market, it wouldn't be a surprise later on after that if it does more damage following through as it breaks past this level and starts to test some of the more longer term Fibonacci. As a 38.2% correction of the downtrend is coming in at 92.88. It has exited mega bearish status or aggressive one below this line, which has been in there since, of course, the May time. So 2 months in the status of extremely bearish over the year has just turned into a small normal or a regular bearish level. But looking at it very, very long term, going back several years to the 2015 lows below 200, I don't got the lines in, but 23.6 is a little over 6,000. 3 times hit, and it is staying in an extreme bullish situation for anything that is above that of 6,000 is extremely bullish. Anything in which is that over 3,000 is bullish, but regular bullish, just not in the extreme. And breaking down below the 1,000, well, that would be that, of course, of ending the bull trend and moving into bear market territory, because leaving 3,000 brings it to neutral form And I've talked a lot about 3,000, and I'm going to say this now, I'll keep on saying it. There will be a long-term 38.2% correction. It may happen now, and it may happen later. Let's assume that the market goes up to, say, 60,000. And using the exact same low of the 150 that is being used amongst the 20,000 highs, 61.8% would equal that of 38.2 down, which is in the same 6,000 price level. It also means that 14,590 in that area would be a key number. So in betweening the upper end of this area, which looking at the chart, doesn't seem too much like of a key area, which tells me that $60,000 is probably not going to be a key high. However, that's not the whole point of talking about the numbers. For going from 60,000 to 6,000, well, that would be 90% off. And let's just assume that it has the $100,000 level. Well, from those $150 lows, that would represent a 38.2% down mark at 8,342. Pretty much current price in the area, just a little higher than where we are. And the 76.4, which represents 23.6, would come in at the key area. So that to me represents that under 100,000, or appears above that of around 90 something thousand, might be a very key area, because generally speaking, you would expect this number to go to the previous high next. However, when we're looking at how large of a decline we are talking now for a 38.2% correction, in this case, we would be talking about well over 90%. So no matter how high I go, that percent's only going to go higher. The 38.2% can very much exhaust the 150 levels, and we can start talking about new lows because, well, quite frankly, we've only finally had a decent correction. For never on this 3-day time frame, since the market bottomed, did it ever extend or ever have any extended periods amongst a declining 18 average until now. So therefore, I'm going to validate around 6,000 as a major level on any markets that may be bullish from here, or that of a key low, and breaking resistance without going lower would make it such. So that would make me look at changing my numbers. So if it goes to, say, 100,000, I'd be looking at Fibonacci from these $6,000 lows, and in that situation, I'd be saying this thing could come back to 17,575. And at that point, I would be totally serious about a move like that to occur. And if it were even to go like just haywire crazy, 6,000 to 175, I'd be more looking first towards the 78,000 mark. But hey, this thing can come back to where it came from at 21. Speaking of which, now that I look at this, about 150,000, what would that make it? I'm just trying to find exactly around 20,000 on here. So somewhere in the 140,000 area. Might be an interesting number as we look very long term. Because we got, in this case here, the 38.2% level, which is 61.8% down at 20,000. Now, how do I look at 12,644, which I always expect I always presume these numbers are going to go to key levels, and time will tell on that. But the whole point of the story is I have to increase the lows. For if I was really wanting to play on the biggest lows that I could find, I could start talking about Fibonacci from the $2.46 lows. And heck, I could even go to a penny or two because that's where it was. But since it had an amazing correction like it did through 2014 and 2015, then I'm going to use those lows. Now this one, as I've stated before, has been a half-assed correction, and boy, will that ever be the case if it bottoms from here on two fronts. One, because of price. The price going from only 20,000 to 6,000, losing 3x, or more importantly, a 23.6% correction. Okay, it's the first key level. I mean, you need to kind of have a bit more than that to show me that you're resilient or that's a good move. At least show me more time correction. And it's been right now about a half a year. And on the grand scheme of things, well, it's okay. It's a half-assed amount of time. After all, it could be longer, and it still may be. Although I say to myself, what's the minimum amount to say, yep, that counts as at least a qualified type of long-term correction in this case? Yeah, it's at that minimum point. But what I'm liking about this on the current level, it's gotten above the 18 average, and this is the main time frame that I want to see a breakout type thing. And I want to see the pattern work, because since this decline happened, it had a small break and a resistance area test on the 18 in the start of March, obviously declining further. Bigger move within the April Fool's rally that had several periods above the 18, but when it came back to, it was unable to break that major level of resistance near the 10,000 handle. So now we have the 18 starting to rise again, and there's really only one of two things that I would like to see here. Either one, I'd like to see this come back and come and have this correctionary test amongst the 18 moving average, or just keep on showing major volatility to the upside. Other altcoins like ZEC, after resisting amongst the July highs, coming back down here and starting to rise higher. Okay, nice little setup coming in, but Bitcoin has been the king within the market. A lot of this has been 2017 autumn Northern Hemisphere all over again, where Bitcoin was going up and the altcoins generally were not, or Bitcoin is starting what looks to be a pretty good rally movement. Litecoin, which has stopped its downward move, has managed to be going sideways for a while, establishing a level of resistance on July 18th, spending several days coming back to the band in that correctionary area, which is very important, and now starting to come back above it. So after I see it come back, what do I want to see when it's leaving the 18? Well, I want to see it break this level of resistance and establish a new high. And in here, I'd be looking at about 110, as that would be previous support level. I said on the way down, I didn't think 100 would be much support. I was right. And I'm saying on the way up, I don't think it's going to be much resistance. Only for the very short term, as such was the case within this. Now, interesting as far as market dynamics would be concerned, because as I'm looking at this market, and we'll put a horizontal ray in here. So this was obvious major support, 3x hit at about 111, 110-ish area, even 115, whatever number. That it made a statement within its down move that happened June 10th. So therefore, the statement is that it's giving up on the support, and we're gonna, well, we've had one leg lower, and it's bad news for the movement. However, if there becomes an up move that happens to make it to 110 area relatively fast, and relatively fast would be the span of a week, 2 weeks in that area, like 10, 15, 20 periods, and then you get to the stage where when the statement of such is made, that means you have you would consider a good probability to break below to a good leg lower, rally up to what used to be support as resistance, which is where I've drawn the line up to right now, and then do the bad news brown kind of deal and go lower and break down whatever, which in this case is about 75, established support that has managed to come into play. But if it continues further in a spot like this, then I'd be talking about all this failed breakdown and fast move higher kind of deal. So therefore, again, same thing, taking a couple weeks to get up to that level. But if it doesn't resist much, and within the next couple weeks thereafter, it spends some serious time supporting 110 and maybe even resisting somewhere even up to about 140. So if it stays in this type of range for a couple of weeks into August, then that would be bringing a lot of signals that this thing could be poised for an extreme move higher. And as I was mentioning last night on my nightly video within the altcoins, how some of them were showing good signals, and the ones like Digibyte, I've been getting buy order city filled this morning, as I've had a decent amount of buy orders get filled, including that of Cloak, as well as it has managed to have another leg lower, as the losses against Bitcoin, you can say, well, or against Bitcoin, is because Bitcoin is kicking ass right now against that of the dollar. And when we look at the calculated price by TradingView on the Bittrex exchange, it's all the same on Binance too, but $3.72. It's been in a downtrend, and the momentum going lower has stopped. It's pretty much a sideways move. However, you have this lower high. We have this obvious lower high, another lower high. And it's in this little bit of a range here. The downtrend is no longer in place. So you call this neutral with maybe a small bias down right now, but enough where if this thing is unable to get up, especially if it goes down, it's going to get crushed against Bitcoin when it makes those kinds of moves. Here's the THC against a Bitcoin, which had a phenomenal move, breaking out from a low of 765 to a high of 1300 and change, so almost a double move. But now it's back to 854, below the 18 average. If we take a look at this calculated price against the dollar, well, it's coming back to its correctionary phase, because stage 1, that would be band flatten out. Stage 2, good job in establishing resistance. Stage 3, come back to where it came from, or not really where it came from. It could be where it came from, but come back to the 18, which is the case. So that's where it stands. And in any situation, seeing the prices start to move higher at this point, well, in this example, and I'm going to take a look at this on a more longer term time frame, it's dollar-based move. We've seen the price in 2015 at 4 zeros on the pennies, 2970, which is many for a penny. I'm not even going to try to calculate that, although a calculator could do it. 2017, 0.0048115, or basically 0005, and I will calculate this one. What I can do is go 0005 and one exit. Oh, 2,000 of them for a penny. Okay. Today I need 7 pennies to get one. The volatility in this game is monstrous. Just look at these lows in at under 4 cents and a price that went to 80 cents. Big moves. And I'm going to finish off by stating I'm buying a lot of other different coins. I've been selling some others only for the situation of moving one coin into another. But for throwing that aside, I've been adding a lot of funds into stuff like XBY. It's not available to show on the TradingView site, and it's traded on Cryptopia. This is a market that when it hit its highs at the start of January, it got to about over 90 cents. Yet it's around 3 cents now. And when I see markets, we're in here, it's like 4,000 Satoshi in 2015, and I have done the calculation. 1x on that is 25,000. So you need 250 of them for a penny, or 25,000 of them for $1. With $1 today, you're going to get about 13. So 25,000 divided by 13 is 1,923. So it's went up about 2,000 times since these lows in here. I'm just saying. Anyway, thanks for tuning in to today's video, and have yourself a great day. Bye-bye.